Companies have slightly reduced the amount of money they are borrowing from banks. That's according to data released by the Reserve Bank today. Private sector credit growth moderated to an annualized 5.54% in January, suggesting some slack in the underlying economy. Economists say some of the attributing factors are stricter lending criteria and the high cost of credit. The generally high levels of indebtedness among consumers is not helping. Although the economy has some prospects of improvement, this trend is expected to continue in 2018. Meanwhile, other data shows that M3 money supply growth slowed to 5.83% year-on-year. This was from 6.42% in December last year. The M3 is the bank's broadest measure of how much money is circulating in the economy. For more on the South African economy, I'm joined by Nadir Thokan from 27/4. Thanks so much for your time on SABC News. Money supply slowing down. Should we read a lot into this, considering that there's lots of spending taking place in December?
Yeah, look, I mean, I think, a point doesn't make a trend. There's been a lot of talk about optimism in the South African economy and, the business confidence and consumer confidence coming through, which is going to boost economic growth into the medium term. I think it's still far too early to feel the impact of that, though, yet. I think the very strong rand we've seen and, is hopefully going to result in inflation moderating somewhat. The 52-cent increase in the petrol price is not going to help at all, but hopefully we have seen inflation moderating to pretty much below the midpoint of the 3 to 6% target band. So and the economy does remain very fragile. Yes, there is green shoots of recovery and optimism for recovery to come through, but it's not yet in the data. So I think the Reserve Bank could possibly start supporting the SA economy with those interest rate cuts, and that's when we're going to ultimately see that M3 money supply starting to expand. We're going to see banks starting to extend credit. We're going to see consumers starting to consume more. We're going to see businesses starting to invest more, but that takes a while to feed through into the numbers. So the fact that we've seen a decline in January, we still see the economy in a very tough space. Obviously, year on year from December to December includes a period of or 2 periods of robust retail growth. Obviously, December it is a bumper retail time. So when the December of the previous year moves out of that window and we're measuring from January to January, that does obviously have an impact, but ultimately, not reading too much into one number. I think when we really want to start looking at the data is if we see the Reserve Bank cutting interest rates and we see businesses starting to invest, that 2 trillion rand of cash on JSE corporate balance sheets, when we see companies starting to invest that's when we want to start paying a lot closer attention to the data.
What is it going to take for those companies to invest? We've seen people saying political uncertainty and economic uncertainty is a problem. Yeah. I think we are seeing certainty from the political leadership as well as the economy.
Yeah, I mean, we're definitely taking a step in the right direction. I think there's going to be greater policy certainty. We saw President Ramaphosa trying to take a bold step towards that with the changes he's made in his cabinet to critical positions. I think there has been a lot of criticism about it being a compromised cabinet or whatever the case might be. But the bottom line is that the critical posts to the economy I'm talking about, is finance, public enterprises and mining. We've seen a clean sweep across all of those, and what we're hoping is that a new broom sweeps clean. Nhlanhla Nene has been the man for that portfolio, in terms of bringing greater policy certainty to the South African economic environment. We're hoping that Gwede Mantashe, for all things considered, he can talk to all constituents in the mining sector, be it labor, be it the unions, be it business, and that's ultimately what's required is dialogue, because dialogue is essentially shut down under previous ministers, and we're seeing the impact of the retrenchments in the mining sector. It's clear to see if you had an asset management firm and you've got mine workers clients, you can see the kind of impact that has had on the fund credits and the retrenchments that's happening in that sector, and that's clear for everybody to see. I think ultimately if there's going to be greater stability in those portfolios, we're going to see a stopping in the hemorrhaging of the laying off of jobs. We're going to see further investment from mining companies who ultimately do want to invest. You know, commodity prices are much higher than they were 2 years ago. These companies are making a phenomenal amount of cash if you look at Anglo-American Amplat's results. So they do want to invest in these sectors, and I think hopefully this policy certainty is going to provide that springboard for the investments, and hopefully going to see it coming through into the numbers for the remainder of 2018.
Nadir Thokan, thanks so much for your time on SABC News. Time for